Assalamu alaikum. Good day to everyone. Dear student, let's just start the last lecture on corporation tax. In corporation tax, basically, we're left with only two small topics and little bit discussion. There's one concept. The name of the concept is personal service company. Personal service company. Now, what do you mean by personal service company? For example, we have one person. The name is Mr. X. Let's say Mr. X has created X Limited. Okay. And what X Limited does, X Limited basically gets contract of services from the clients. Okay. Mr. X has created one company. The name is X Limited, assuming. And what this X Limited does, it gets contract of services from the clients. Whatever contract X Limited gets for services, Mr. X is the only employee who goes over there and provides services. Mr. X is the only employee, let's say, who goes over there and provides services. If this is happening, then logically, look at this X Limited. Actually, X Limited is doing only one work. What is the work of that company? To get the contract from the client and simply give that contract to Mr. X, and Mr. X is the one who is providing services to the company or to the client. Okay. Now, obviously, what is the objective of Mr. X to create this X Limited? There's an objective. Obviously, X Limited is going to provide salary to Mr. X, and on that salary, Mr. X is going to pay the employment income. On employment income, Mr. X will have to pay the income taxes. Okay. Now, there's a possibility that Mr. X is not just getting a salary from X Limited. Mr. X might also be getting the dividend income from X Limited. And tax rate on dividend income is far more less than tax on employment income. So since X is the only employee and shareholder of this X Limited, so obviously he will not be just getting the salary, he will also be getting a dividend. The benefit is if Mr. X gets the dividend from X Limited, so obviously tax rate on X dividend is far more less than the tax rate on employment income. So in that scenario, what happens? HMRC says that Mr. X needs to calculate a deemed employment income, and on that deemed employment income, Mr. X has to pay the tax. Repeat. In that situation, Mr. X has to calculate the deemed employment income, assumed employment income, and on that assumed employment income, Mr. X will have to pay income tax. Now, in that scenario, when there is a personal service company, X Limited is a personal service company, how do we calculate a deemed employment income on which Mr. X is supposed to pay the tax? Dear students, you need to know the format. So simply personal service company is, there's an worker, let's say individual who has created a company gets the contract from the clients, and X Limited is the only worker who goes over there and provides the services. So in that case, HMRC says that we need to calculate deemed employment income. On that deemed employment income, Mr. X will have to pay tax. How do we calculate deemed employment income? There's a performer. Performer for notional salary calculation. Amount received in any tax year from relevant engagement, whatever amount, let's say company has received from the client, less statutory deduction, which is 5% of this amount, less employer's NIC paid by a personal service company, less pension contribution by personal service company, less salary paid by personal service company, which they have already paid, allowable expenses. You will get deemed salary including personal service deemed employment NIC, less employer's NIC. Whatever amount comes, multiply that with 13.8 divided by 113.8. Then you will finally get a notional salary. The 5,000 employment allowance, if available, cannot be used to offset any employer's NIC arising on the notional salary. Even the employment allowance is available, you're not supposed to offset any employer's NIC arising on notional salary, on this notional salary. So you are not supposed to deduct that employment allowance for the employer. Okay. To avoid a double charge of tax, the national salary and NIC are allowable for calculating corporation tax profit. Whatever is the notional salary, NIC, they are allowable expenses for the corporation tax. Where dividends are subsequently paid out of the income, they are ignored as part of the individual's taxable income, which is very much logical. If we have calculated Mr. X salary and the notional salary on that salary plus the notional salary, let's say Mr. X has paid the tax. Now later on, if company provides dividend to Mr. X, you are not supposed to take that dividend as taxable income for the Mr. X, because technically he has already paid the tax on, let's say, on his salary if he has received second on national on notional salary. So later on, if Mr. X is getting any dividend from X Limited, that will be ignored. Let's apply this on. Let's see a question on PSR, and this personal service company is also called IR 35. Personal service company is also called IR 35. Calculate deemed employment income arising from the relevant engagement with Wilson Limited and income tax and the employer's NIC payable in respect of the relevant engagement. Okay, Brian is a consultant trading through a personal service company, Conrad Limited. She is the only director and employee and owns all of the shares of the company. The way back we did discuss, if in the entire company there is one employee who is the director of the company, then employment allowance of 5,000 is not available. During the tax year 23-24, Bryna was occupied almost full time under a contract Conrad Limited had with Wilson Limited, a small organization. Wilson Limited is a small organization. That is very important concept. Because whatever we are right now doing, we are doing this with the perspective that Brian is running a personal service company, and the personal service company has received the contracts from a small organization, Wilson Limited. Because if the organization is going to be large, the rules are a bit different, which we are going to discuss, inshallah. Don't worry at all. Wilson Limited, Conrad Limited, 70,000 in fees for Brian services. Conrad Limited did not receive any other income. So the entire fee is just 70,000. Bryna drew a salary of 25,000 from Conrad Limited in the tax year 23-24, which is tax via pay as you earn, and employers NICs 2194 were paid. Now let us simply apply this format over here. Test your understanding 5. We need to calculate employment income, income tax, and employers NIC. Employment income, income tax, and employers NIC. How much they have received? 70,000 pounds. Should. Amount received in the tax year from relevant engagement. Amount received is 70,000 pounds. Let us deduct 5% statutory deduction. If I take 5% of 70,000, this is 3,500. I'm getting Just do this. Just 70,000 minus 3,500 less the salary which we have given is 25,000. Employer's NIC which is already paid is 2194. So 70,000 minus 3,500 minus 25,000 minus 2194. It gives us 39,306. Deemed salary including employer's NIC. Deemed salary including employer's NICs. Then look at the format. We have to calculate employer's NIC, just less employer's NIC. $39,306 multiplied by 13.8. 39,306 multiplied by 13.8 divided by 113.8, that gives us 4,766. Here comes the deemed employment income. Deemed employment income is 34,540. Deemed employment income is 34,540. Now let us calculate. Income tax on this deemed employment income. Let me show you one working. Basically, this gentleman is already getting a salary of 25,000, which means that he's already having a salary of 25. If I deduct the personal allowance 12,570, so logically, already there is a taxable income before this deemed employment income. 25,000 minus 12,570 gives me 12,430. It means that when we'll be calculating tax on this deemed employment income of 34,540, so entire basic rate band will not be available. Logically, out of 37,700, 12,430 is already utilized by the existing salary of 25,000. It means 37,700 minus 12,430. So we do have a basic rate band, but it's not 100%. 37,700 minus 12,430. The remaining basic rate band is 25,270. We need to calculate income tax on deemed employment income, and basic rate band which is available is 25,270. Applicable tax rate is 20%. If I take 20% of 25,270, this is 5054. Now from 34,540, let's deduct 25,270. You will get 9,270 into 40%. 9,270 into 40%, that is 3,708. Income tax on deemed employment income. Income tax on deemed employment income is 8762. Income tax on deemed employment income is 8762. Now, calculate deemed employment and income arising from the relevant engagement with Wilson Limited. Income tax, employers NIC payable in respect of the relevant engagement. Okay, now B. Calculate corporation tax payable by Conrad Limited in the year ended 31st March 2024, assuming the personal service company legislation applies. Fine. Requirement B. Corporation tax liability. Basically, Conrad Limited earned a trading profit of 70,000, let's say. From this 70, let us deduct the staff cost. Company is already paying 25 to Brian, plus company has paid 2194, which means the staff cost is going to be salary 25,000 plus employer NIC 2194. So 25,000 plus 2194, we'll get 27,194. Now let's deduct IR 35 cost. Deemed employment income, which we have calculated. It is 34,540 plus on this 34, we have on this 34,540 is the deemed employment income and employers NIC is 4766. It means for the company, IR 35 cost is deemed employment income, which Conrad Limited will pay 34,540 plus employers NIC, which is 47. So IR 35 cost for the company is 39,306. How much taxable total profit is left? Just 3,500. And corporation tax rate will be 19% because of the small profit. Augmented profit is less than 50,000. Due to small profit. Small profits rate. Since augmented profit is less than 50,000. So corporation tax payable simply 3,500 into 19%. Repeat, from the corporation tax point of view, the income of the company is 70,000. From this, we have to deduct staff costs. Earlier, there was a salary of 25 and employers and IC 2194. Now there's a deemed employment income of 34,540 and less the employers and IC of 4766. So taxable total profit 3,500, which is applicable tax. Corporation tax rate is 19% because augmented profit is less than the less than the small profits threshold, which is 50,000. So that is IR 35. Does a worker have an employee, the relationship with the client? If there's no relationship, normal rule apply to the company and profit of extraction of profit by shareholder. If there's a relationship, the company is person service company, deemed salary calculation required based on tax year. No tax on dividend paid from profits. This is the format and when you have to pay. Now, this is something new. Now, listen and listen carefully. Whatever we have discussed right now, it was a personal service company, of course, and organization company was getting contracts of services from small clients. What if you are a personal service company and you are getting contracts from medium or large organization? Then what happens? Where a medium or large client organization engages with personal service company, it is the responsibility of the client to determine the status of the individual worker. The client will have to issue a status determination statement to the individual, which will set out their determination. If the client determines that the personal service company rules should apply, then it is required to calculate and pay income tax NIC on deemed direct payment. The deemed direct payment is calculated, set out below. Payment in respect of services provided net of VAT, less direct cost of material incurred by personal service company, less deductible employee expenses incurred by the personal service company. Very important concept. You are running a personal service company, but this time you're getting contracts from medium or large organization. Now it is the responsibility of the large organization or medium organization to find out the status of individual worker. If IR 35 is applicable, then what needs to be done? If the client determines that personal service company rules should be applied, it is applied, then it is required to calculate and pay income tax NIC on deemed direct employment. How do we calculate? This is the format. In order to avoid double taxation, deemed direct payment is deducted from any payment made to personal service company worker, such as salary, before calculating income tax. Okay. Just see this and test your understanding 6. This will give you a really good idea. How do we calculate deemed direct employment payment? Calculate deemed direct payment arising from the relevant engagement with Bless PLC. Calculate deemed direct payment arising from the relevant engagement with Bless. GOK provides interior design services through a personal service company. One Limited has a contract with Bless PLC to provide GOK's design services. Bless PLC's class as a medium or large client organization has issued a status of determination statement of GOK stating that services fall within personal service company rules. One Limited has sent Bless PLC an invoice of 20,000 VAT exclusive for GOK design work for the year ended 5th April 2024. One Limited incurred expenditure £500 in respect of a stationery used in the provision of the design services. We just need to calculate deemed direct payment arising from the relevant engagement. It's very simple. Just first take the, we are doing test your understanding. Just you need to know the format. Payment in respect of the services net of, this is 20,000 in our question. Less direct material costs incurred by personal service company, which is 500. Deductible expense incurred by the personal service company, we don't have any other. So directly there will be deemed direct payment of 19,500. This deemed direct payment will be subject to income tax, employee NIC, employer NICs. And this would be simply calculated as if GOK was a direct employee of Bless PLC. On 19,500, there's going to be income tax, employee NIC, employer's NIC. Simply, Bless PLC will deal with GOK as GOK was their direct employee. Okay. Just a minute. Let me discuss one more concept. Actually, we have, alhamdulillah, discussed all the areas of corporation tax. And we did discuss pre-entry capital losses, but there was a question from one student. I said, okay, let me make it a little bit easier. The discussion of pre-entry capital losses. Capital losses of a company before joining 75% gain group can offset against the gain from disposal of asset before joining the group. Number one. Second, from disposal of asset which were owned before joining the group and sold after joining the group. Third, and the last, from disposal of asset which were acquired after joining the group and sold to a third party. I think these 1, 2, 3 are better as compared to what we discussed earlier. Earlier, the explanation was a little bit far more than this. So it was a query of one student, sir, I want you to make pre-entry capital losses easy for me. So now I strongly believe the how to deal with the pre-entry capital losses should be extremely easy for you students. So students, alhamdulillah, we have completed your corporation tax. Now in the next class, what I'll be doing, I'll be discussing few things on ethics, of course. And after discussion on ethics, or maybe with the discussion of ethics, we will start practice videos as well. So I would say take your corporation tax and the entire ATX completed. I think we went for around, there's one practice video. I know it was 77 or maybe 78 was a practice video. So you can say around within 79 lectures, we have completed alhamdulillah entire ATX. So in this finance act, I took, I would say 3 to 4 additional videos. Otherwise, the normal trend is I used to complete the entire ATX within 71 to 72 lectures. So thank you very much for watching this lecture. Inshallah, in the next class, we'll be discussing ethics and plus we will start practicing questions. So thank you very much and have a nice life.